the Fed's target is 2%. And so far, the inflation has been proven sticky, as if like it's not going down as expected or at the speed at which it was expected. So 2.7% is still way high above the Fed's target. So the inflation number, as long as it doesn't soften or as long as it doesn't come down, this gives very little room for Fed to aggressively cut the rates. So that is giving downward pressure on the stock markets and the equity markets. The third point that I wanted to discuss is the crude oil markets. So remember, the one of the main reasons of inflation ratings coming down was the crude oil was constantly going down. So now, since the crude oil is again going up, that is $74 per barrel basis, that will push the upward pressure on the commodity prices, and eventually that is going to put an upward pressure on the inflation ratings. So let me show you the crude oil charts so that you can get a fair idea of what I am talking about. So if we go to the commodities and if we go to the weekly chart, so you can see over here, the crude oil, it peaked in almost 2022. And since then, it has been trading in this sideways channel and it was stabilizing around $62 to $70. But now, since the last 2-3 weeks, we have seen a rise in the crude oil prices. So if we see a rise in crude oil prices, then that eventually trickles down to all other commodities and eventually in the inflation numbers. So the very fact that crude oil is stabilizing above $70 is not a good sign for the inflation numbers, which we are going to get at the mid of this month in the form of CPI and PPI data. So we have to stay, keep a close eye on these numbers for us to know like what will be the reaction of the Fed, because Fed also takes into account all of these data while making the decisions on the monetary policy. So these kind of data points are very essential and helpful to know or gauge what will be the response from the fiscal side.